What's up everyone, it's Caddy with Money Investing. So in this video, wanted to talk a little bit about the housing market and the recession lag that we're going through. And enough about the banking crisis. I gotta step away from that because we've been talking about it nonstop for such a long time. But in this video, my goal is to kind of show you some charts, show you some data, which definitely is suggesting a recession is still on the cards very much, but with a significant lag. And shout out to EPB Research for putting this all together. Really cool research and data points. So again, credit goes to them. But I wanted to break down that report and kind of go over some charts and data here. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us and of course getting access to all the buy and sell alerts, options alerts, trade ideas, and get access to all the other benefits, including lectures, private videos, and tutorials as well. There is a 16% annual discount that does expire at the end of this month, so you can take advantage of it for the next few weeks. So first things first, this right here is going to be the estimate from the Atlanta Fed that came out on March 16th, 2023, so just a few days ago. And the next estimate is going to come out this Friday on March 24th. But right now, you'll notice that for the first quarter of 2023, the estimate for GDP to grow is going to be 3.2%. That is what the number is, 3.2%. That is the expectation for the GDP for the first quarter of 2023 to grow at. That's a pretty substantial number, right? That is a very strong growth rate for the economy. And unemployment rate has ticked higher from 3.4 to 3.6%. However, there is one category of employment which is still going in very strong, and it's that category of employment. When that starts pulling back, when that starts receding, is when there are clear, very important recession signals. And that is going to be construction employment. So if you take a look at all employees in construction, every single recession going back as far as 1970s, there's been a downtick in construction employment before there was a recession, right? So construction is pretty much what drives the economy. Very important for construction and of course manufacturing. Those are two very key sort of categories in which we are growing. It's kind of like boom and bust type categories to begin with. So if there is literally no construction happening and there's construction layoffs, then there is clear signs of potential recession in the economy, and that's showing cracks in the economy as well. And construction is a little too broad. And more specifically, we're talking about residential construction employees, which we'll go over in just a minute. But if you take a look at the drops here, again, a couple months, a couple, few years of drops here before the recession kicks in. And again, you can see downticks over here. These are annual, so you can see the downticks over here as well before we enter a recession. This right here in 2000s, once again, you see this construction market and construction labor market kind of softening a little bit, few downticks, and we enter a recession. And of course, back in the great financial crisis, pretty brutal drop back then in construction employment. And right now, as you can see, that we are still incredibly strong, pushing higher. There's literally no softening in the construction employment. And more specifically, like I said, residential building construction. And what you'll notice here is that it actually precedes a recession far more than construction overall. This is all employment in all categories of construction. But if you simply take a look at residential building construction, it pretty much has pretty much a lag time, right? In other words, a recession lags by this indicator by, on average of about 5 to 6 months, or could be as much as a year. But right now you'll notice that it started to already downtick back in the 1990s. And then we enter a recession. This right here, another lag in the 2000s, we get a recession. This right here, a huge pullback in residential construction. We get a recession, of course, in the great financial crisis, a little bit of a downtick back during COVID, and we get obviously a very small, the fastest, quickest recession recovery. And right now, once again, you can see that we are seeing a pretty strong uptick in this potential category. Now, this is going to be manufacturing. Once again, you are seeing a lot of, uptick and a very strong labor market in manufacturing as well. So these are the two sectors that I wanted to go over, and why, I think there's going to be an environment in the future where both of these, manufacturing and residential building construction as a whole, you are going to start to see some layoffs happen because of a couple different things. And let's just address why construction employment is still so strong. Because if you take a look at units under construction right now, they're still moving up really strongly, right? So these can be, larger multifamilies and multi-unit residential contracts, or even commercial contracts that are still under construction that take a little bit longer to actually complete. And that's one of the reasons, why they are pushing higher. Units under construction are still very strong, as you can see with the arrow pointing up, and it's been pushing higher without absolutely softening at all. And in the past, going back as far as 1975, once again, you'll notice that this actually precedes a recession. Every time we actually start to see a bit of a pullback in units under construction, that's when construction employment comes down, and that's when a recession actually begins. And you can see that in 1975, 1980s, you can see that in 1990s, late 2000s, a little bit softening there, so it doesn't really pull back, so that's a little bit of an anomaly there. But of course, definitely great financial crisis back in 07, 08, but right now, super strong market. Now, the reason why, there is going to be a possibility where we do see units under construction start to come down and construction employment also starts to come down under residential construction is because of a simple reason why building permits and home sales are declining. So what happens, there's a chain reaction, right, which does obviously take a lot of time to play out as these units under construction get completed, right? And there's not new construction jobs on the market. They're not coming online. Why? Because building permits are dropping. So building permits are literally a measure in the change the number of new building permits issued by the government. So it pretty much gives the contract or the agreement for contractors and construction workers to go out and build new homes or renovate existing ones, or pretty much, that's the bottom line. That's the starting point for construction. You're seeing a pretty substantial drop, right? So those are dropping. Home sales in the US are dropping, right? So you're seeing home sales and both building permits are dropping, but at the same time, units under construction, so these are existing units that are still going higher, which is not really dropping the residential employment for construction. So I think eventually what we'll see is that as these units under construction get completed and there's not new building permits and not new construction projects coming online, that's when you will start to see a bit of a pullback in construction employment, which could then trigger a potential recession, and obviously could ripple through some of the other things that we have talked about, some of the other indicators such as money supply. We've talked about oil prices doubling in a very quick time period. We've also talked about the inversion of the yield curves. We've talked about the credit markets. And now if you pile on the banking crisis along with the consumer spending and the earnings recession, I mean, there's a lot of things to really be focusing on here, but I wanted to address this, which I found really interesting, from a recession indicator standpoint, where construction employment is still very, very strong at the moment, but eventually it is possible that it starts to pull back as units under construction get completed and there's not new projects coming online from building permit standpoint, because it has been dropping. Home sales have been dropping as well. So hope you guys enjoyed this video. Let me know in the comment section down below, what do you think about this? And I would love to know from you guys as well. If you have any other analysis to add, any other research to add, I would love to know down in the comment section below. But hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel, and the link to our Discord and Patreon is going to be down below. You definitely don't want to miss that out. Consider supporting the channel. There's a 16% annual discount available for a limited time. If you want to be a part of our money investing community, link is going to be down below. As always, happy investing, and I'll see you all in the next video.